Why does Bitcoin have value? Well, part of it's because people believe it has value in the same way that we have a belief system around a dollar bill having value, right? It's just a piece of paper backed up by literally nothing from the government, but we believe it has value. So in a similar fashion, Bitcoin has people who believe it has value, but it goes much deeper than that. The most recent number I saw is around 600 to 650 million people globally own cryptocurrencies. Let's say about 10% of the adult population of the world currently owns crypto. At least some small amount of it, which is big. Don't wait around for your government to come save you. This is one thing that I think everybody's learned over time. Your government's not coming to save you. Your government's not going to come help you. It's probably going to be very much the opposite. But you do have the chance to save yourself. And gold investors have known that for a long time.
I'm Garrett Wong, and this is the Investing to Win podcast. How do you define success, and what does winning look like for you?
Lark, welcome to the podcast.
Thanks for having me. Excited to talk to you.
Yeah. So you're in Dubai and I'm here in Winnipeg, Canada, and looking out the window here, it is snowing. Tell me how before we get into the whole intro thing, tell me why you're in Dubai.
Dubai felt like the right decision for me and the family at this stage in life for a variety of reasons. And I was like, it's just the taxes. Okay, the taxes are a great bonus. Going to put that out there. But it's not enough to pick up life and go somewhere else, right? There's a lot of reasons. We didn't have any family back in New Zealand, so that was one thing that was really weighing pretty heavily on us. Our family's in Russia or the United States, and so we didn't want to really go live in Russia or the United States particularly. So that, well, let's go somewhere in the middle. Where can we go? Okay, where's good for my business? Where's good for life and safety and schools and all this kind of stuff? So after a lot of hemming and hawing, going back and forth and visiting a few different places, we decided, yeah, Dubai's kind of got everything that we're looking for. Great family vibes, cool entrepreneur vibes. So yeah, it's been a pretty cool move so far. Really like it. The weather's great, except
Yeah.
for summer.
No, I have some friends in Dubai and New Zealand and Australia. So I don't know why I'm out here in Canada freezing my what off. But anyhow, let's do the podcast thing. Why don't you give your intro to the audience so we can see who you are?
Sure. So I'm Lark. I'm a cryptocurrency Bitcoin investor and entrepreneur. So we've got our YouTube channel. We've got our X account. We're posting regular insights, news, updates on the markets, educational content. We have a newsletter as well, about 150,000 subscribers. So we're just pumping out all kinds of content all the time, trying to get people up to speed, educate people on the cryptocurrency market, because actually learning crypto is hard and it's a big learning curve. And we try to make that learning curve a little bit easier.
Okay. And then backing up before crypto, what did you do?
So before crypto, I was an English teacher. So I was teaching English and enjoyed that. I liked being a teacher. Being a teacher was fun. I was a teaching assistant at university and then went off to be an English teacher. And it was fun. I liked doing that. I liked talking to students. And it was just a neat way to be living life for a little while. But one of the things I realized while doing that, I did that for about 2.5 years or something like that. One of the things I learned while doing that is that if I ever want to get ahead, I'm going to have to do something different in life, right? It was fun, enjoyed it. It was a good job to do in my mid-20s. As I mid-20s, mid-20s into early 30s, I guess. Gosh darn. Anyway, but I've been doing the crypto thing for 8 years now. So I did start doing this when I was 31. So I guess I did about 28 to 31 teaching English. But anyway, besides the point, it was a good job. I liked it, but it was kind of job where there's not a lot of places to go with it. You keep getting more degrees and more certifications to make a few more dollars an hour. And don't know, I wanted to do something more interesting. And I sort of stumbled into crypto content creation. And I just loved the cryptocurrency market. As soon as I started diving really into crypto and what it was, I was just hooked. It's like, yes, crypto, this is awesome. This is like the thing that's going to happen. And I didn't necessarily start crypto content creation to make it into a big business like it is today. It more started as a hobby and a fun thing, but then it really grew into something big, and I quit the day job and went full-time crypto in November 2017 and haven't looked back since. One of the best decisions I've ever made in my life.
Wow, it sounds like you are using your education and your background and your passion for teaching and kind of marrying those two things together.
Yeah, I mean, definitely being a teacher helped, right? I was used to talking in front of people all the time, talking in front of classrooms, educating people. And it was interesting kind of how I started out even creating content, because I started making content just on my journey, right? Even just back in the day, buying your first piece of Bitcoin in 2017 was still pretty hard for a lot of people in a lot of places. In New Zealand, it wasn't easy to get the first piece of Bitcoin. So it took a while, just that journey, start documenting that journey, learning about stuff. Okay, hey, I'm learning about mining this week. What are we going to talk about? We're going to talk about cryptocurrency mining and how that works and make some content around that. And then people would ask questions. They say, hey, Lark, what about this? What's up with quantum computing and crypto, which was a conversation that would freak people out in the market yesterday, by the way, but still we were talking about back in 2017. And so I'd make, I don't know, that's a great question. I'm going to make a video on that and kind of stay one step ahead of the students, right? So it was fun.
So you started out, I imagine, I'm guessing, as a crypto investor?
Yeah. Yep. Started off with Bitcoin first. That was first cryptocurrency I ever bought. Had to buy Bitcoin first. Then once you get Bitcoin, you kind of go, well, now what? Right. So then you buy other cryptocurrencies. So I bought some XRP, something called Digibyte, which don't think anybody really talks about anymore, and one called NEM, which I don't think anybody really talks about anymore either. Those are my first three cryptocurrencies. I got my altcoins, all right, and I was very excited. And then what? So I actually started posting on a social media platform, which I'm not sure anybody even uses it anymore, but it was some blockchain-based social media platform where you'd post stuff over there. And if you got upvotes, particularly from whales, it would be worth money. You could actually cash out the tokens and, I'd make 5, 10, $20 sometimes on posts. And that was like an hour's work back then. So I was pretty excited. And that kind of kicked off the monetization of creating content idea in my brain. Started making videos on YouTube, posting over there. The YouTube channel started getting more traction and everything sort of grew out of that sort of organically, not me showing up and say, okay, I'm going to make a cryptocurrency YouTube channel and make a big business out of it. It's kind of started as a hobby and then grew into something more.
Yeah, I mean, obviously, I'm a content creator too, in the real estate space, and I think from what I've seen, the content creators, some can do it to say, hey, this is what I'm going to do. Here's my pathway. But I find the organic content is, I don't want to say more authentic because the other ones are authentic, but your journey and probably looking back and seeing some of those, what you probably now go just awful videos compared to how polished you are now, that's just part of the journey of a content creator.
Absolutely. It's interesting because in 2018 was a terrible bear market in crypto. And there was that sort of reckoning, well, gosh, was this really the right decision? And I've already quit my day job and we're going all in here. And I said, no, this is going to be big. Crypto's not going to go anywhere. But the views went away big time in 2018. I went from getting sort of averages of 10, 20, 30,000 views per video at the height of the craziness back down to 1,000 views per video, 2,000 views per video. So it actually gave me a lot of great time to experiment with different video formats. And I just tried all kinds of different stuff and ended up with this, the talking head. It's the simplest thing. It's the easiest thing. And it's what I enjoy doing the most. We had green screens. We were doing comedy skits, like all kinds of stuff. It was a good time, but it was, more than is necessary. So I found out what content worked, and it is a journey doing that.
So when you say talking head stuff, you talking just like video podcast stuff like we're doing right now, or just turning on the camera and teaching?
Just turning on the camera and talking. I've got two, maybe three different kinds of videos we'll do. One is sort of just this. I'll have a script we've researched on a topic, whether that be some kind of charts or analysis or a review on a cryptocurrency or sort of like cryptocurrency education stuff. That's this. And so it's a little more polished, talking straight at screen, reading the script. So make sure we get all the information out to people. And the other is a much more casual format of just me. I've got some charts, I've got some tweets, some news, stuff like that. We just share that, and it's much more mellow kind of content form.
And what's just out of curiosity, what gets the better engagement out of those two?
Really depends. I would say in terms of effort put in and investment put in terms of script writing, research, editing, all that kind of stuff, the more casual videos definitely come out on top as sort of being more economically sensible. And I think generally more poignant because they're news videos and people tend to like them more. That being said, when we get a really good long form scripted video, they can really hit super well, way better than the news videos we'll ever hit. We got one that got 200,000 views last week or the week before, and that was scripted good video with lots of good editing and insert interviews and all that kind of stuff. That was really solid. And you can't really do that with just a casual sort of news video, right? So it's kind of, you've got the core community of people who show up for the casual news video, and you have sort of a broader reach when you do those more polished videos.
Yeah, no, again, real estate content, it is much. I don't think people realize when even just it looks casual, but then when you've got at least bullet points because you're teaching, you don't want to, like for me, you're leaving out something about rent control or how to evict a tenant. You don't want to leave out point 4 and 5. That is so important. You can't really do that off the cuff. No, let's get into it a little bit, but I think because myself, as well as probably the average listener, is just like, ooh, crypto. And now they read, we were just discussing in the green room about Bitcoin going over, at least at the time of the recording of here, over 100,000. Can you really like dumb it down, make it like layman's terms, what crypto is, and then we'll dive into wherever the conversation takes us?
Sure. Crypto at its base, right? Bitcoin is the first. We have lots of other cryptocurrencies that have come since then with all kinds of novel ideas for applications and all sorts of stuff. But essentially, cryptocurrency, blockchain technology, it boils down to this. It's the value layer of the internet, right? So we have the internet as it is, Web 2, as we like to call it. So that's your Facebook and all this kind of stuff. There's a lot of stuff going on, but there's not a lot of value to transact. Whereas cryptos come in, it's built the value layer of the internet. So if you want to send money across the internet in a peer-to-peer fashion, not having to use a banking app or something like that, crypto's there for that. If you want to do peer-to-peer investments for Bitcoin or meme coins or whatever else, crypto's there for that. And the use cases expand out exponentially, borrowing and lending markets without middlemen, just smart contracts, code, right? Software. So this is where crypto comes in as a value layer for not just transacting, but for also proving who has what. We have stuff like NFT technology that gives verifiable digital ownership of assets, whether it be a silly monkey picture or a piece of real estate or a bond that can all be represented on chain, again, with verifiable proof of who has what. So, really powerful technology. And obviously, the power of cryptocurrency is getting a lot of recognition, particularly in 2024, because BlackRock has come in a major way. Now, this I think was the one of the biggest social proofing events ever for crypto. If you ever had any doubts of whether Bitcoin's a serious asset or whether blockchain technology and cryptocurrency assets have any real value in the world's biggest asset manager and Larry Fink, the most powerful man in the world, one of them, let's say, 1 to 10 maybe, he is big on Bitcoin and he is big on the tokenization of assets, whether we talk about real estate, commodities, securities, bonds, whatever it might be. That's all going to come onto the blockchain because it reduces friction. Here's a great example. If you've ever sent an international bank transfer, you know what a nightmare that can be. It takes days to get from point A to point B. And often there's middleman banks that take extra fees. Sometimes they'll stop your transaction. They're not even going to tell you for a week or two. And then a week or two later, you get a phone call. Hey, why are you sending money from point A to point B? Well, because I need to pay for something. Yeah, but we're not really sure. You need to give us more evidence of why you're paying for that. This is happening multiple times. And it costs, of course, a lot of money. You're paying $10 to your bank, $10 to the middleman bank. You're paying Forex fees, all that kind of stuff. Whereas if I get some Bitcoin, I can send you some Bitcoin in just a few minutes. Now, Bitcoin is the slowest of all the cryptocurrencies, by the way. It's the OG one. It's the most secure computer network in the world, by the way. And it's slow. It doesn't need to be fast. It's not built for speed. It's built for security. So I can send you some Bitcoin. It'll be with you in 10 minutes, maximum of an hour, depending on the fees that I pay for it, which is days faster and 99% cheaper in most cases than using the banking system. And we have new currencies that allow for that process to happen within a couple of seconds for a fraction of a penny.
So yeah, let's dumb it down even more. I have a working knowledge of this only because I've had a couple of crypto people on the pod, but it's been like a year, and now you're going into blockchain and NFTs and things like that. Let's just say, what is crypto? Why is there value? And then we'll move from there.
Sure. So Cryptocurrency is based on blockchain technology. Okay. Blockchain technology is simply a verifiable, immutable ledger of transactions. So let's take Bitcoin as the classic example. So Bitcoin, you can go back right to the start of Bitcoin. And every 10 minutes, there's been a new block of data that gets issued out. That block of data contains the transactions of who sent what where. Okay, Bob and Sally did a transaction, that's recorded. Bob sends Sally 1 Bitcoin, great. And in the middle, there is the software, the network of miners who are verifying the transactions to make sure nobody's cheating. And they take a little service fee, which is the transaction fee for making sure that's a valid transaction. So, at a very basic level, this blockchain technology allows for a verifiable ledger of who has what, and it allows for a permissionless way for people to send money from one person to another.
Why does it have value? Like, I'm going to ask questions as if I'm pretending I'm my, again, I'm 53 years old. I've always invested in real estate. I'm trying to go into the avatar of our listener. 53, always invested in real estate, always e-transferred here in Canada or, whatever other electronic funds, but it's still real dollars in currency. Why does blockchain have value that you can actually trade, transfer? Let's go from there.
Sure, there's blockchain, the technology, right? Blockchains don't necessarily have value. You can have a private blockchain or a valueless blockchain, but we talk about specific blockchains like Bitcoin. Why does Bitcoin have value? Well, part of it's because people believe it has value in the same way that we have a belief system around a dollar bill having value, right? That's just a piece of paper backed up by literally nothing from the government, but we believe it has value. So, in a similar fashion, Bitcoin has people who believe it has value, but it goes much deeper than that, right? Bitcoin is also representative of a piece of essentially digital real estate of a fixed amount of a digital asset, right? So there's
Okay.
only ever going to be 21 million Bitcoin, which creates a sense of scarcity for the asset. And because people look and they understand, okay, I want the value proposition of what Bitcoin is as a unique asset within the cryptocurrency space. If enough people demand to have that asset, you run into the problem of scarcity of the asset, which of course drives the price up, and people give it a value that it has, which currently is around $100,000 per Bitcoin. Now, why do people value Bitcoin? Well, there's a few interesting things. Essentially, people are looking at Bitcoin nowadays as digital gold. So, okay, we know that gold has industrial applications, right? So there's a very specific use case for that. But a big portion of why we value gold is because gold is gold. And we've all agreed that this particular yellow metal has investment value. Now, gold's not the most useful metal in the world necessarily. It's very useful. It's also not the rarest metal in the world. There's other metals that are rarer and potentially make better investment vehicles. But we have not decided that that could be the best investment vehicles. We've all decided gold, gold coins, little gold bars. This is where our investment lies. Central banks stack gold, for example. They don't stack huge amounts of um, palladium or galenium or any other kind of metals, right? So there's that to consider as well. We've decided that certain things have value, and Bitcoin has value to a huge amount of people for being a permissionless asset, for being a decentralized asset, for being digital gold, the gold of the new era, essentially.
Okay. No, that makes sense. You mentioned 21 million Bitcoin. I'm aware of that concept. Can you explain that?
Sure. So the total supply of Bitcoin is set at 21 million. So it's hard coded in. So it's guaranteed scarcity. See, as opposed to gold, they're not finding new gold deposits all the time. El Salvador just announced they found potentially a few $1 trillion worth of gold. That follows on some other recent major discoveries of gold. China, I think, found a major gold deposit recently. Uganda found a major gold deposit recently. So they're always finding new gold, right? There's lots of gold. Maybe we start mining the oceans, right? So there's an unknown amount of gold out there, and it's got an approximate average inflation rate of around 2%. Huge amounts of gold in the world. We don't know how much. And then, of course, we'll start mining space at some point, not in our lifetimes, but there's lots of gold out there. Let's just put it that way. Bitcoin, by contrast, is 21 million coins. That's the maximum supply. Now, these coins are slowly emitted over time. Now, currently, we're up to about 19.5 million coins, but the rest of the 1.5 million are going to come over the next 120 years or so, with probably 90% of those over the next 20 years. So it's a very slow process over time emitting out all of this Bitcoin, but there is a hard coded and again verifiable total max supply, which is very attractive to a lot of investors who are looking for that store value trade and are essentially buying Bitcoin as a gold alternative, but an undervalued one that has not yet reached a market cap similar to gold.
Right. And to your point, if we talk about paper money and a country that simply says, well, we don't have enough money, we're just going to print more. I mean, that just it devalues the currency, and that's not what an investor wants, right? That's what, some countries do, and it kills their economy, inflation, all those types of things.
And you can never print more Bitcoin. That's the thing.
Okay. And then speak to me about mining just in a very general sense. I know there's Bitcoin miners. How does somebody mine for Bitcoin and why does it work?
So, mining Bitcoin, essentially, there are tens of thousands of computers around the world. Now, Bitcoin mining has become a pretty industrial thing at this point. You literally have warehouses full of computers that are mining Bitcoin. So every day, about 450 new Bitcoin are created as rewards to the Bitcoin miners, the guys running the computers. Okay. So Bitcoin mining is the process of keeping the network wildly secure. So you have, again, tens of thousands of highly specified specific application purpose built computers that are wildly powerful securing the Bitcoin network. They all essentially compete to be the guy who gets to claim each reward that comes out 10 minutes. Every block is set with a set reward of Bitcoin that comes into it. So, in exchange for processing the transactions and recording in that page of the ledger who Bob sent his Bitcoin to. Did he send it to Sally or Jane or Annie? It's all recorded there, right? But they're not actually names, they're cryptographic addresses. But that's the idea. And so they record that and they get a reward for entering that page of the ledger into the total ledger book, essentially.
Okay. No, that makes sense. So, the other types of crypto, you said Bitcoin's very slow. Maybe give us an overview of the different types. Maybe going back from, some of the ones you said that nobody minds anymore, not that popular, to what's hot right now.
Sure. I mean, look, there's tens of thousands of cryptocurrencies that are tracked by the major tracking sites. There's tens of thousands of new ones created every single day, the vast majority of which are scams and go to zero in seconds. But here's the thing. There's a lot of big networks that have had a big impact. Ethereum is the second biggest cryptocurrency. It's what's called a smart contract platform. So Bitcoin's very basic. Digital gold. That's Bitcoin. That's the thing to understand about it. Verifiable digital gold, highly divisible, all that kind of stuff. One Bitcoin breaks down to 100 million pieces, et cetera. Right. So very, very simple idea for people to understand. Other major cryptocurrencies, whether it be Ethereum or Solana, these are called smart contract blockchains. So essentially, they're a blockchain that allows for additional functionality on top of it. So they're a base layer, and people build applications on top of that. And there's a lot of different applications that people build. There's stablecoin applications that allow for the transfer of US dollars across the blockchain. There are borrowing and lending markets. There's video games. There's social media platforms, all this kind of stuff built on top of these blockchains. So they allow additional functionality through smart contracts, which are essentially software that allow for the creation of these different financial applications on top of a blockchain network. And they're built on top of a blockchain network, not just on some random website somewhere, because it's interoperable, it's verifiable, and it's permissionless.
So, when you stack some of these things on top of that cryptocurrency, kind of like it's going along for the ride, what happens to the value of that crypto? Like, is that what's driving the value?
So if you talk about, let's say, Ethereum, right? Ethereum's got the most money on it of all the blockchains. It's got 80, $90 billion of dollar stable coins on it and $100 billion worth of different assets in sort of borrowing lending platforms and stuff like that on top of Ethereum. So to an extent, yes, we see the more value and useful applications that are built on top of a blockchain, the more value that it can accrue. The more people are using it, the more demand there is for the asset. You see, to use Ethereum, for example, you need to have some of the Ether token because, again, in order to make sure that networks are not spammed, right? If you had free transactions on blockchain networks, the networks would simply be spammed all the time and they'd be unusable. But because there's transaction fees ranging from very, very small to maybe a few dollars per transaction, depending on the network that you're using, because of that, you have to have a little bit of that asset to be able to interact with the network. So if I want to go and to use an exchange on the Ethereum blockchain, so it's all decentralized, right? I download my decentralized wallet, I fund it with some Ethereum, and I can go do whatever I want. I can buy any assets that I want on chain using a decentralized exchange. So if you think about your stock brokerage exchange or something like that. It's all centralized, a Web2 platform, Web2 logins, all this kind of stuff, where instead I can go on chain on this Ethereum blockchain, log in with my cryptocurrency wallet, use my cryptocurrencies, all permissionless, just using software to swap my Ethereum for another token. But in order to do that, I have to have a little bit of money to pay to the miners to put that transaction into a block so that it's then verified, put in the immutable ledger, and everybody can see the transaction from then on out.
And who controls the immutable ledger? Like this is just when a cryptocurrency is introduced, all of these things are kind of defined. And are all cryptocurrencies um, a static amount of coins that are available, like Bitcoin? Is that basically the theory in every single crypto?
No, not at all. Great question, though. So we've got a lot of different ways this has been approached. Bitcoin was created by an anonymous developer, Satoshi Nakamoto. He made Bitcoin, stuck around for a couple years, released it in the wild. He hasn't heard from for 12 years now, I think, like that. And it is maintained, the code base is maintained by a group of open source developers. Okay. So people, it's like an honor to work on Bitcoin. Other cryptocurrencies, Ethereum or Solana as examples, they have foundations. Those foundations own a portion of the cryptocurrency. They pay developers to make sure that there's continual upgrades going on, that's, set new parameters for how fast it is, what the fees are, new updates to make sure the technology stays robust, all this kind of stuff. So a lot of the cryptocurrencies, Bitcoin's taken that sort of fixed supply idea, right? Others have fixed supplies as well. Some have what's called elastic supplies. So Ethereum's an example of one that has an elastic supply. So technically, there's no total top for Ethereum. They could make an infinite amount of it, so to speak, but it's only got so much emissions, so many new Ethereum are created per block per day. So, and that's offset by burning mechanisms, which are basically perpetual stock buyback mechanisms put within the blockchain that burn a certain amount of the asset every time somebody sends a transaction.
Okay. So, I mean, it goes without saying that crypto has just been growing like crazy. What is the what do you think the factors are that's increasing its popularity?
There's a lot of things going on. Ever since, of course, Trump got elected, there's been basically the Trump trade going on, particularly for crypto, because there's lots of talk around bringing on Bitcoin as a strategic reserve asset for the USA. Brazil's now talking about it. Russia's now talking about it. We see corporations adopting cryptocurrencies. Now, 60 publicly traded companies that have Bitcoin on their balance sheet. Microsoft was talking about it, was shot it down. Amazon apparently is going to be talking about potentially doing that as well. So we're seeing a lot of this adoption continue to happen for Bitcoin. The Bitcoin ETFs launched this year, and the Bitcoin ETFs launched by BlackRock and Fidelity and some of the world's biggest asset managers. These were the most successful ETF launches of all time. Of all time. We already have $34 billion of net inflows to Bitcoin ETF products. Most successful ETF launch of all time. Is absolutely mind-blowing numbers coming into these ETF products. So there's a lot of stuff driving Bitcoin specifically, and there's a lot of stuff driving crypto more broadly. We're seeing increased stablecoin adoption. We're seeing altcoins getting ETFs. So altcoins are other currencies that are not Bitcoin. So Ethereum's got an ETF. We're going to have Solana have an ETF. A lot of people have probably heard of XRP. That's going to get an ETF. But when we do get a new SEC administration, we'll get some more of those things coming through. The current SEC administration has been very antagonistic towards crypto. But there's a lot of things, and I think it really just mostly boils down to increasing adoption for cryptocurrency technology. The number of people actually using blockchain networks on a daily or weekly or monthly basis is hitting new all-time highs all the time. We're talking tens of millions of people. In total, the most recent number I saw is around 600 to 650 million people globally own cryptocurrencies. So that's big. That's almost 10% of the global population at that point. You got to consider, I guess, a lot of people are babies, so they're not going to have crypto. So let's say about 10% of the adult population of the world currently owns crypto, at least some small amount of it, which is big.
Yeah, that's huge. That's huge. Um,
And by the way, that's predicted to get to 3 billion by the end of the decade.
what's an ETF? Just so you can, lots of acronyms thrown around. What's an ETF, just for the audience?
So an ETF is basically an exchange traded product. Okay. So basically, if you want to go and buy one Bitcoin or a little piece of a Bitcoin, you can now go to your Charles Schwab or TD Ameritrade, whatever stockbroker app you're using, and you can buy a Bitcoin ETF from BlackRock. So basically, it's a piece of paper, right? It's like a stock that you buy, and that is put in your account. Now, you don't actually buy real Bitcoin in this situation. BlackRock or Fidelity or whoever else is issuing that particular ETF paper product for you to buy on your stockbroker app, they go and buy the actual Bitcoin for you. So if I go and buy one BlackRock Bitcoin ETF, they go and buy the Bitcoin for me and they hold on to the Bitcoin for me. So these Bitcoin ETF products have given people a super easy way to be able to get into Bitcoin, because before you had to go and you had to get an exchange account and find a way to get money over there. And then you don't really want to keep it on the exchange. That might get hacked. So you have to get a wallet and download your private keys. And it's a big learning curve for a lot of people who they've heard about Bitcoin. They've got some idea. They've maybe heard a few podcasts about it or something. They want to have exposure to Bitcoin, but don't want to have all the hassle of Bitcoin. Well, that's where the ETF comes in, because you can just buy it like you'd buy any other stock.
But there must be fees associated with that if BlackRock is buying that for you, right?
Of course. I think I'm not sure what the BlackRock fee is. I think it's about 0.5%. So obviously, if you buy the Bitcoin directly and hold it directly, you're not paying any fees to anybody. You can just sit there for 10 years and you don't pay a single penny in fees. If you have your BlackRock Bitcoin ETF for 10 years, you're going to pay 5% over that 10-year period.
Right. But of course, the alternative is setting up your wallet, setting up your accounts, et cetera, getting knowledge. So yeah, I could see why investors are turning to that. You mentioned Trump administration. What other cycles or factors are driving this that we're seeing in 2024?
Sure. So look, we've seen global adoption really taking off in a very, very serious way. It was announced that the tiny little country of Bhutan has been mining Bitcoin. They now have $1 billion of the Bitcoin. And you might think, well, who cares about that? That's just some tiny little country in the middle of nowhere, not a big deal. Yeah, well, now we've got Oman, the UAE confirmed mining Bitcoin, Russia mining Bitcoin at state level stuff, right? Not just like somebody in Russia doing that, like state level actually actors doing this. The Russia is now talking about creating a strategic reserve asset of Bitcoin. Brazil, that's currently being debated in the Congress, whether they want to create a reserve asset, so put 5% of the country's central bank funds into Bitcoin. Like, these are big things happening out there. So in terms of the Bitcoin value proposition as a scarce asset, you're literally now at a situation where countries and major corporations and Wall Street, as well as just regular people who are the only people really buying for the past 10 years. But now we have all these new players coming in, all chasing after a scarce asset. So this is one of the big things that's really been pushing a lot of the excitement in the market, is a lot of new buyers coming in and again buying all this scarce digital gold. But a lot of other things too, we're seeing sort of less exciting but very important things happen. Like, so there's something called a stable coin. A stable coin is basically a digital token that lives on top of Ethereum or Solana or some other blockchain network, and it represents $1. Well, sometimes they represent other currencies. You have ones for euros, you have ones for Japanese yen and stuff like that. But let's just say dollars. So these currently have, must be about probably almost $200 billion in stable coins right now. Maybe it's 190 or something like that, but a lot of money. Let's just put it that way. And stable coins have been one of the absolutely killer applications for blockchain networks because it allows for you to transfer dollars from person A to person B for, again, fractions of a penny and almost instantaneously compared to using almost any other option. It is the best option by far. So we're seeing a lot of new stable coins coming out with major banking partners sort of coming in and backing some of these things. Countries issuing their own stable coins. The UAE recently announced that they're making a stable coin version of the Emirati dirham. So that's an official state issued stable coin coming out. So, I mean, things are getting pretty crazy out there. And this is all driving adoption of more liquidity into the markets.
Yeah, I mean, you said about 100 years, 150 years before we reach 21 million. I mean, I can't even project what'll happen at that point when all of the Bitcoins have been issued. Do you predict that would drive the price even higher at that point, or is that just expected?
So the idea with the Bitcoin emissions over time, by the end of the century, there's only going to be about one Bitcoin left to mine. That's the thing. It's going to be 40 years mining just one final Bitcoin. The idea is that over time, the Bitcoin block rewards. So in 4 years' time, we're going to drop from 450 Bitcoin a day to 225 Bitcoin a day. 4 years after that, we drop from 250 to 125, and every 4 years that gets cut in half. The idea is that over time, the price of the asset will rise enough and the network usage via fees will be what keeps the network alive because the fees will be valuable enough to the miners to keep the network running. So far, so good on that whole theory, by the way. The early days had very, very high block rewards with thousands of Bitcoin a day being issued because there weren't as many users for the blockchain. So we needed to have higher monetary incentives for people to secure the network. Now, over time, again, this is all coded in at the start of Bitcoin. Over time, we're seeing the total amount of new Bitcoin issued drop while network stats remain good and the miners can survive more on fees and less just on block rewards.
Yeah, wow.
It's a big experiment. I don't know how it's going to work in 100 years.
It is. You know, I think what blows my mind is what you said there, Lark, about state-sponsored mining. So instead of these countries, and I mean, pick your country, right? That is, I made the example of just printing money, right? Now they're putting the resources into state-sponsored mining, which is essentially improving their economy because now they're grabbing assets that they couldn't before. Like, what is the world going to look like in terms of these? It's very interesting.
It's a crazy time to be in. You know, for any, again, for any of the sort of people who are still doubting the seriousness of Bitcoin as an asset, look, there's a lot of other cryptocurrencies and a lot of it's very unserious stuff. But when we talk about Bitcoin specifically, literally there's half a dozen countries that are currently mining Bitcoin at a state level. Some of them are very small, El Salvador and Bhutan. Some are bigger players like the UAE, Russia, right? The USA, Trump has said he wants Bitcoin to be made in America and stuff like that. And currently there's no private government run sort of Bitcoin mining operation. There's a lot of public companies in America that are mining Bitcoin. It's one of the biggest Bitcoin mining countries by total percentage of the Bitcoin mining power. But the move towards strategic reserve assets of Bitcoin, I think, is something that's absolutely going to be a game-changing moment for the cryptocurrency market to see. We already, again, see very small countries holding their Bitcoin, Bhutan, El Salvador. There's been a lot of rumors running pretty hot that one of the Middle Eastern countries has been buying gargantuan amounts of Bitcoin. Has not yet been confirmed, but some very knowledgeable people with very close ties to some very powerful people who would not put their reputation out there saying these kind of things otherwise have basically said that right now there is a country who is front running the idea of the American strategic Bitcoin reserve. So there's been two things proposed in America. One is that they'll simply keep the Bitcoin that they have, which they have about 200,000 Bitcoin approximately they've got from various sources over time. So the US government owns about 200,000 Bitcoin. Now, historically, they just sell it all, right? So they slowly sell it all over time, trying not to crash the price too much because that would work against themselves. So they sell a little bit here and there, take that money and just bank it, right? But Trump's proposed, no, let's not sell that. Let's take it, put it with the Fed, and they're going to keep it for at least 20 years. And there's been a second proposal, which is to sell some of the American gold. And America's got like way more gold than anybody else. Sell a little bit of the American gold and use that to buy 1,000,000 Bitcoin. Now, if that actually passes, there's no way that that can happen. And other countries are not going to have to pay more attention to what's going on with Bitcoin.
Mhm.
America's going to buy 1,000,000 Bitcoin, and suddenly France, Italy, Japan, China, Hong Kong, Australia, everybody's just going to ignore it.
No, they're not gonna let that advantage happen. Um, is it public who owns what at this point? Or is it speculation, or how do you verify that?
So everything is visible on chain, but there's no names there. It's all just cryptographic address. So it's not like, you know, Saudi sheikh owns this Bitcoin, guy in Argentina owns this, right? But sometimes on-chain detectives can find these addresses. That's how we found the Bhutan address. That's how we know that Bhutan has about $1 billion worth of Bitcoin right now. The guys in El Salvador, the El Salvador Central Bank has been buying a Bitcoin a day for the last 2 years, and they've publicly posted their address so people can track and see that, yes, they're buying 1 Bitcoin every single day. So you can see stuff like that. Others, it's not so clear. There's been some on-chain activity where we've seen big addresses accumulating. That's given rise to speculation that maybe the Saudis or the Qataris have been buying, but they haven't announced anything yet. Because why would they want to announce it? Because everybody else will then start trying to front run their buys. So do it quietly.
Well, okay, so I've got a thought in my head because the strength of an economy, at least in my humble opinion, is really based on confidence, right? Confidence in the currency. So I'm from Canada. Right now, our Canadian dollar is probably the worst it's ever been, right? Um, I think it's like $1.45 as of today, like basically one and a half times. Where I don't know, a decade or two ago, you could probably be there were the rare times when the Canadian dollar was almost at par with the US dollar. Now, a lot of that has to do with confidence, a lot of that has to do with economy and what's going on between the two countries in politics. But imagine for a second if a country were to start mining Bitcoin and starting to have this verifiable reserve, what would that do to public perception for the value of the paper currency, in your opinion?
Well, it depends on if there's any relationship to the paper currency. You can look at the United States as a great example. The United States has the world's biggest gold reserves, but it doesn't matter. It has no impact on the dollar because the dollar has been backed by gold since the 1970s, right? That's the unfortunate reality of modern fiat currency is that it's backed by literally nothing, and the central banks are not accountable to anyone. They don't answer to even the politicians in many cases. They do whatever they want. And they print as much money as they want. And they have shown that they are willing to print gargantuan sums of money whenever they want. And that has huge impacts for you as a regular person because inflation goes up and your savings get debased. In my lifetime, I often give the example if my father had taken $100 and put it in an envelope when I was a kid and gave it to me now, that $100, what's $100 worth anymore? Back then, back in the mid 1980s, $100, like, whoa, $100. Where'd you get one of these? Wow. Now it's like $100. That's maybe gonna buy lunch somewhere if we're lucky.
Yeah, right. Not if you have a glass of wine.
So you've already lost 75% of the purchasing power of the dollar in my lifetime. It's insane. Now, contrast that, of course, with Bitcoin. You see, this is the thing is that even if a lot of these countries start adopting Bitcoin and start storing the central banks and stuff like that, it's not necessarily going to trickle down to backing the fiat currencies. It'd be great if it did. It'd be great if we had gold backing or some kind of commodities backing fiat currencies. And the BRICS nations, by the way, have put forward a proposal, and it's tough because you have to get a lot of nations with competing interests to agree on this, but they put forward a proposal to have a BRICS currency, but a currency that's backed by a basket of commodities, including other countries' currencies like Chinese yuan, South African rand, but also oil, silver, gold, timber, stuff like this. So real stuff in that basket backing the value of that currency. So don't know when that's going to happen, but that would actually be something tangible. The problem with fiat currencies is nothing backing any of them, but Don't wait around for your government to come save you. This is one thing that I think everybody's learned over time. Your government's not coming to save you. Your government's not going to come help you. It's probably going to be very much the opposite. But you do have the chance to save yourself. And gold investors have known that for a long time. Bitcoin investors are the gold 2.0 investors for the modern times. We live in the modern internet era. I like gold. I like gold. It's cool. Big fan. But Bitcoin is gold 2.0, and you can buy it yourself. Don't wait for your government to buy it for you.
Yeah, that's a great analogy. Lovely. Why don't you? I think you've demonstrated over the last hour here the knowledge base you have, right? Like I'm suitably blown away. I'm sure our listeners are just like, okay, I know what I don't know. Why don't you spend a few minutes speaking about your platform? You mentioned students. Sort of give us. I guess I'll allow you to sort of pitch, if you will.
Thanks. Look, I just want to say it's been a really interesting conversation so far because most of the time when I'm coming to talk to people, they already have some kind of base or talking on my channel. It's all sort of people who are a little more
Technical.
no, we're just hooked into crypto sort of on a more regular basis. So it's actually really fun to actually kind of come back and have this conversation. It's really interesting for me. So thanks for giving me the opportunity. Look, guys, if you want to come find what we're doing, come over on X, come on YouTube, Lark Davis. That's make sure you get the official accounts, by the way. We're just doing all kinds of educational content all the time, sharing the news, sharing fun memes. We're having a good time. You gotta have fun. It's investing. Don't take it too seriously. Okay. But yeah, we've got a great newsletter as well. If you want to find that, it's the wealthmastery.io. It's 150,000 people a week, giving all the latest updates happening in the cryptocurrency markets. So we'd love to see you there.
Wow. No, you're clearly the forerunner in it, and I commend you for it because it's not easy to be a leader in the content creation space, and particularly with that level of knowledge and acuity with what is an emerging technology. No, I think you guys are doing amazing things and making the world a better place because of that knowledge that you're imparting.
Thank you so much. I appreciate it. It's my passion. It's great to be able to do something that I love as my job.
Yeah. Second last final word here. What do you think an investor should do if they want to learn more about this, other than obviously following Lark Davis, in terms of what's the next thing that people should be paying attention to?
Sure. If you want to get invested in the cryptocurrency asset class, the first thing I would say, and where prices have been going pretty crazy recently, so people are feeling a lot of FOMO. You need to take a step back and just go and learn, educate yourself, it's a new asset class. This is the thing. It's not stocks. It's not commodities. It's not bonds. It's an entire new asset class. You have to understand the mechanisms of that asset class and a bit of how it works. You're going to have to spend 10, 20 hours, read some stuff, listen to some podcasts, actually understand what it is you're investing in before you put any money in. Because here's one thing about crypto. Crypto is a very volatile asset class. Okay. So crypto, if you look's got about a 2-to-1 beta to tech stocks on average. Not all the times, not perfect, but generally, if tech stocks are down 20%, Bitcoin's down 40%, something like that, approximately, and the rest of the crypto market's down more. So, just as an example, so you have to be used to that potential for massive volatility, and you're never going to have success in crypto if you're just coming in without any knowledge because you'll see it drop 5 or 10% in a day and go, oh my gosh, what is this? I don't understand it, and I'm going to sell it. You need to actually have that understanding of what the asset is and what it is you're investing in. You wouldn't go and invest in anything else without having any knowledge. So resist the FOMO, educate yourself. And that's one of the first things I tell anybody before you buy anything, educate yourself. And when you do go to buy something, you probably want to buy Bitcoin first, just a little bit to get a taste of what's going on in crypto. And for a lot of people out there, you're not even going to need anything else besides Bitcoin, maybe Ethereum. If you're just a casual investor, listen to this conversation, go, wow, Bitcoin's really cool. Maybe like to have some other exposure to something else going on in crypto. If you're just a casual investor and you want to have that exposure, buy some Bitcoin and maybe Ethereum. You can maybe buy ETFs if you don't mind paying the fees. If you feel you can custody those coins yourself, do that. And that's probably it. Put 1 to 5% of your portfolio in it. And these are not my numbers, by the way. These are what like Fidelity, ARK Invest, even BlackRock. These are the kind of numbers that these guys are giving out about what they think's a reasonable allocation for the average investor to have to the cryptocurrency asset class. Because reality is, if you haven't had Bitcoin in your portfolio for the last 8 years, you've underperformed anybody who's had even 1% of their portfolio in Bitcoin.
Okay, great advice. Great advice. Okay, and then the final word. I always ask this question of every guest, and I'm interested to see what you have to say because you're an investor, but also the fact that you moved your family around a little bit. So, this is the Investing to Win podcast. How do you define success, and what does winning look like for you?
I feel like I already have got both. I feel like I've really got to a great level of success in terms of my business does what I want it to do. We've got enough money to not have to worry in life, which is a great feeling. Um, yeah, I feel like very much filled with gratitude all the time for being able to do what I do. And I feel like I've already, to an extent, won the game and have got that success. So it's great. It's great. Success looks like more of this. And over time, I might pull back a little bit on like the YouTube. I feel like because things are very exciting in the market right now, I've really been going all in on YouTube. And over time, I might even retire from YouTube and just focus on the newsletter and stuff like that and take back even more of my time. Because, of course, at the end of the day, the only thing that really matters is your freedom, right? And I am free to do what I want to do. I choose to do what I do now because I love it. I love the game. I'm addicted to the game without a doubt. But over time, the reality is that all that stuff, making more money, adding another zero, it reaches its limits, right? And you can still make loads of money every year and not have to work quite as hard. And there's that element too. So over time, I think I might move a little bit more of my achievement towards having a little bit more just freedom and being able to chill a bit more.
Yeah, well said. Well, I mean, we do what we do to have fun and to spend time with those that matter most to us. So, um, Lark, thanks so much for doing this. I know that we broke it down into very, very basic conversations. My listeners and investors who are listening really appreciate it. And yeah, we're definitely all going to be checking out your content and your platform. So thanks for coming on the pod.
Thank you.